So where'd you come from?
Came from Norcom.
If you see me looking down, I'm taking notes. Okay, Wade?
Okay.
How long you been doing this for? Remind me.
Oh, how long have I been doing mortgage origination?
Yeah.
Oh, directly, I've been doing it for about 25 years.
Okay.
10 years of that, I was training 250 loan officers on how to do it the right way.
Okay.
And then I went back into the market
Okay.
to do what I had been training them on for 10 years to do the right way. And much of it isn't working anymore. Much of it isn't working anymore. You know, that's a great distinction you just made, and helped me make. A lot of what I trained them on, because many of them were averse to government lending, trained them on government lending primarily, use of down payment assistance secondarily, and thirdly, I was showing them how to take the changes and use the changes that were happening in the industry for government loans to their advantage by using it like not beating a realtor over the head with a stick with it, but actually, creating awareness more than they were getting. I did 10 years of continuing education training. I did 3-hour courses for 10 years straight to about 1,000 realtors a year, with loan officers inviting their realtor contacts to come in and hear directly from me, and our company at the time was National City Mortgage, about the changes in the industry, what they should look out for, how to sell, how to identify one of their clients as a fit for one of the programs, because they didn't know all of the ways that a program would fit. So I helped loan officers tailor fit loan programs to the clients of their referral sources, which helped us gain a lot of traction. We went from an unknown to second and third in the industry in government lending during my tenure as a trainer. I was a specialty lending manager for Ohio and Pennsylvania, and then the crisis happened. And they saw no need for a group that I was involved with to continue to train loan officers, because they were changing companies. PNC actually was given on a silver platter National City, and PNC subsequently laid off myself and my entire team, and that is when I began to originate again.
What date was that?
That was to be certain, it was August of 2009. August of 2009. So in September of 2010, I was relegated to be a loan officer again, because I had been a loan officer prior to that from 94 to 99. But even before that, I'm 65 years old, okay? So I've been doing mortgage loans from the desk on Friday evenings, Friday afternoons, from noon to 6, for specifically just mortgages. And I had all my mortgage applicants scheduled for that date and time. Each week, that's what I broke out for my lending as far as mortgages go. The rest of the time I was doing other products, services. The other four days of the week, I was doing other products and services at the bank office. So I just did mortgages on those Fridays. But then, the bank wanted to get their CRA rating up, so they made me an offer that I couldn't refuse, and said, "Hey, we need you to originate CRA loans in our market, because you know how to do the mortgages, and it seems like you are tuned into the market that we want, low to moderate income people." So I did
CRA
that.
loans are fun. Yeah. Okay.
Yeah, fun to a point.
Back me up to COVID times to today? What have you been doing?
COVID times today. During COVID, I was with two different mortgage companies. I was with, I was with Victorian Finance in Pittsburgh, and also with Norcom out of Connecticut.
Okay.
And that was after a stint with Homebridge. I did a stint with Homebridge prior to going with Victorian, and that was Homebridge was right before the pandemic hit.
Okay. And then when the pandemic hit, when you were full-time originator?
Full-time originator, commission only, struggling like a fish going upstream.
Sure, man.
Yeah, I was not in the river. I was going up, I was hitting the rocks.
Yeah,
I was
sure.
trying to get to clear water. But I spent all that time on the rocks, just getting beat up basically by the changes in the underwriting, Dodd-Frank, too big to fail, all that crap, RESPA changes, all that started kicking in when I went back into origination after the crisis. And
After
then,
08.
yeah, after 08.
Yep.
And then that was that actually was flavoring my my struggle for the next 10 years. Yep.
Okay.
From I'll say from 12, from 12 through August of 23. I've been struggling ever since.
Okay.
But I didn't give up. I didn't give up, but I didn't have as my goal being a top producer, because I was still inundated with low to moderate income buyers with no money, needing down payment assistance, with poor credit, needing counseling, and no money, poor credit, and trying to fit them into boxes that they were struggling to fit into. And then they were uneducated. They were uneducated. I'm bringing myself up to speed with all of the changes that are going on in the market, only to find some of these people, because of the changes, no longer fit. And they could have been doing something about it before coming to me, but then I get stuck with them to convince them that you don't fit right now. You need counseling. You need to save some money. You need to work on your credit. And because of my race, many of my applicants were just like me. They were African Americans, and they were not as educated with financial literacy. So I spent a lot of time doing that.
Yeah.
And like I said, I was hitting rocks. I was hitting. I would get a lot of leads. I would get 10 to 15 leads a week, only to find out that one or two were even close to being ready. But I had to make all those phone calls, do all that explaining. My wife got tired of hearing me talking on the phone. Man, it's just been tough, and I'm at the point where I was about to retire. Before being picked up by Nationwide mortgage bankers, I was considering seriously retirement from the mortgage industry. I was going to just get me a nice little part-time job and just muddle out the rest of my years. However, my passion for home ownership and training some of the younger people into how to do it stuck with me. So when they recruited me and they gave me a salary, they gave me more basis points than any of the last 3 mortgage lenders that I worked with. They believed in me, and they also looked at my status in life. 65 years old, all this experience. Hey, we could use you, and that's why I signed on with them. I felt that they looked at me more than just a number to generate some loans. They looked at me as someone who could offer some help to some of their newer loan officers, as well as do more business for them, while at the same time building a book that could be transferred to someone else.
So you're at what's the company? Nationwide
Mortgage Bankers.
Okay. And are they paying you a salary?
Yep, they're paying me a salary just under what it would take for me to stay under the threshold for my Social Security.
Good. And they want you originating and training, yes?
Yes.
How often are
Because
you training and how are you getting in front of their employees?
right now, I'm just learning the software. So
Okay, that's right.
that hasn't begun yet. However, I found that working with the underwriters that I'm assigned to, and the processors and the loan officer assistant that I'm assigned to, all of them have other loan officers that they are working with. So they want to capitalize on some of my experience. So that's why they offered me a salary in addition to commission.
When was your start date?
October 9th. I just started Monday.
Good, man. Okay. So that'll continue to feed that passion of education, right?
Yes. Yes.
Um, okay. Where do you kind of see yourself in the future?
How
Talk to
far?
me. Yeah,
How far?
as far as you want to go, man.
In the first year, I see
Sure,
myself.
let's.
Okay, we'll do it a year at a time. By October 24, I want to look back and say I closed $1 million a month.
Okay.
October 25, I'd like to say I was closing 2 million a month. And I'd like to stay anywhere between 2 and 3 million a month in originations, all types of loans, not just forwards, but reverse as well. So
Yeah.
I've kind of mapped out the next 5 years where I would sort of hit a plateau at around 3 million a year in originations and coast from there until age 70. And then maybe just go back into consulting uh, for any of the loan officers who wanted to get more training and do training at that point. But I think staying in the game, staying with it so that I could navigate as someone who is actually in the field doing the deals, hearing the objections, overcoming the challenges that changes in the industry has provided will give me more experience to share with others who want to do the same. Younger people,
That's
more
me, man.
yeah, more minorities than majorities, but there's some majority needs too because the volume of low to moderate people is growing. It's not it's not growing where they're going into the middle class. The UC and middle class find themselves in the low mod ranks where they're needing the same assistance that low mod people have always needed, but they weren't used to because they were in the middle class. They had money, they had good credit. They avoided bankruptcy, but they hit some bumps in the road too, and they need someone to help them navigate.
Yeah.
So learning and being a student of the industry is where I'm at.
So Wade, it sounds like you've got your kind of baseline structure at where you've really wanted it to be comfortable to kind of keep staying in it.
Yeah, well, I mean, I got in where I fit in. Okay.
Yeah. Too short, man. That's what Too Short says. Get in where you fit
Yes, it
in.
does.
So Wade, what would you say it is that really has you interested in what I'm doing over here?
Well, I'm looking for some assistance in how to, if you take my description of sifting, I'd like to be able to quickly sift through those who are ready versus those who are not ready and be able to move past all of the questions and issues that a borrower who is uneducated, so I can move forward to people who are ready to go. So, mortgage coaching that I'm looking for is how do I sift? How do I sift better without pissing people off? Okay, because when you tell them you can't help them, they feel like they're defeated. Um, I took self-development classes and trying to keep people encouraged and also give them a plan so that they could be successful. However, I see many of them avoiding the plan, doing what they want to do. So I have to step away from those types and be able to sift them out of my queue because they keep
Wade,
calling.
Yeah, I'll tell you what, man, I feel like the direction that you have been so willingly giving to other people, it might be nice for you to get that same thing back finally,
Yeah, really. Yeah.
you know?
My wife says I don't know how to say no. She says
Yeah,
I
and
need a class on how
I
to say
think
no.
that there's probably a much more tactical way for you to have a better use of time and still help everybody. Okay.
See, I see.
So when you talk about sifting to more higher level potential, not necessarily yeses, because you're getting the yeses, right? You can talk people into saying yes.
Oh yeah, I can sell.
They feel comfortable with you.
Oh yeah, oh yeah. I can build trust. I can build loyalty. That's not been the problem. It's just taking that trust and loyalty and converting it into a transaction that pays me.
That's right.
That's what the problem is.
And I think how we fix that is we get a better skill set at listening. Okay. And listening for the right type of mechanisms and asking more questions and listening to getting a better diagnosis of how to help. Okay. I'll give you a great example. Do you ever go to a dermatologist for allergies?
How'd you know? Yes.
Okay. They don't know, man. They go, what'd you do different, Wade? Well, what'd you eat different? They start to ask questions to really help you self-diagnose yourself. You kind of get what I'm saying? And I think what we can do for you is teach you a slightly different approach with consumers and referral sources to getting yourself more clarity with a form of questions versus a script of conversation.
I see.
Because you know what you need to hear. And I can tell you're very passionate about what you can do for people.
I'm pretty confident too.
It would be great if we could get paid like paralegals or attorneys and charge by the hour to educate.
That's why I'm doing consulting.
Yeah, but it's very challenging in our industry because quote unquote licensable mortgage activity cannot be a fee collected on until you provide a closed transaction, right?
Right.
So what we need to do, Wade, is we really need to have a process that allows you to ask specific questions, and relative to the answers of those questions, you then are allowed to get excited and educate. Okay.
Here we go with the sifting. So you're giving me a grade.
And what we need to do with that is we need to bring that down to the quickest, fastest, shortest conversations that we can have in order to find the real excitement, to then get people to then do a application with a credit pull in order to diagnose. Okay. We need to have 4 or 5 questions up front. I can teach you that stuff that will quickly help you understand whether you're dealing with somebody that's even worth pulling their credit. Then once we know that you've got all these tools in your toolbox, down payment assistance, bank statement loans, DSCR, 3% down, no mortgage insurance, lender paid mortgage insurance, whatever that will be. We don't diagnose or talk about prescriptions to anybody until we've got a credit profile, but nobody's allowed to take a credit profile until you know there's value with your prescriptions. Make sense?
Yes.
Okay. So you're educated, you know what you're doing, you know how to help people. Wade, I have met people, very wealthy people, and I always ask them the same question. If you could have more of anything, what would it be? And I get two answers every time.
Well, time is probably one of them.
That's right.
Patience may be the other one.
Health.
Health.
For the people that are out of shape and they don't have their personal life in check, the first thing they say is, I wish I had more. I wish I had better health. For everybody that is wealthy, that's fit, and works out every single day, they only have one thing, and you said it, and that's time. And that's the only thing, Wade, in our world that you and I can't control.
Right.
And that's the only thing in our world that we can't buy a book on. We can't get coaching on. We can't have somebody help us figure out how to get more of. But everything else in life can be fixed, can be worked on, can be adjusted, can be coached. Right? Now, when we talk about coaching, just in general, and you're familiar with this, if you go meet any coach, they're going to implement some form of mindset into that equation, right? The difference that we bring to the table with what we're doing here and what I'm coaching is when we teach mindset, we also bleed it into the intricacies of your business. Most coaches teach you mindset, the importance of mindset, the importance of gratitude. But how do you leverage those techniques in the mortgage space? Okay. Now, what happens, Wade, is we've got two ways to monetize our business. Salesmen do it, and then there's 1% that do it a different way. Let me know if our connection gets slow, okay?
We're doing good.
Okay. Most people monetize their success based on fundings and closings. They don't feel successful unless they're doing $1 to $2 to $3 million a month, right?
Yeah.
Okay. The problem with that, Wade, is that when we're feeling desperate about finding monetary success to feel successful in our day, we get on this emotional roller coaster. We either think about quitting, getting out of the industry, or we do what's called the shiny object syndrome, where we start trying a bunch of crazy shit that we see all these other loan officers doing in hopes of something sticking and finding success. Or what I would say the worst thing, Wade, is we find a little bit of success, and that's the one thing we do really well, like chasing real estate agents. And that's all we do.
Only chase the good looking ones.
Those are problematic.
Even the ones that are broke. I would
What
chase the good looking ones because they could be converted. I want to convert them. I want to change them into a
good
performing attractive person from an underperforming or non-performing attractive person.
So
Go ahead. I'm sorry.
what we work on, Wade, with mindset is we transition our mind to monetizing our business based on gratitude and relationship wins. And when we build our success based on building relationships, The monetization comes in growth. And what happens there, Wade, is it doesn't matter what you're doing for work. Doesn't matter if you're a loan officer. Doesn't matter if you're selling homeowners insurance. It doesn't matter if you go to a title company or you become a paralegal if you're a table funding state and you drive a bunch of deals in the door for an attorney. It doesn't matter what you're doing anymore, because the offerings that you bring to the table are not that of a mortgage loan outlet, but it's that of a real relationship. Now, we work on development, personal development, because we want you to envision what that perfect life is like, the 3 million a month maybe for you. But what does that really mean? Consistently coming in, a little more financial freedom, a little more time with your wife, less conversations, more quiet time, right?
Okay.
But in order to get there, we've got to visualize 4 pillars of our self-development, which is our perfect self, our perfect business, our perfect finances, and our perfect family. And as we envision those, regardless of where you are in your life, and we continually work on those things daily, that allows us to clear a better path mentally for where you really want to see yourself. Once we've got the mindset piece laid down, we have what we need for foundation in order to then develop out what I call your personal business guidelines. So before we get into that, do you understand the value of the mental aspect? You know it works. You know it's there, right? That makes sense to you. Okay. Once we've got that figured out, we start to develop out what we call your personal business guidelines. So here's an analogy that I know you understand. There's all of these guidelines tied to the products that we lend. Black and white. If this, then that. No, maybe this, sometimes that. The problem is, Wade, is we don't really have those guidelines in our business. Nobody's developed them for us, right? So while we're so bound to the products and the black and white writing within those products in order to lend that money, there's nothing there for us for structuring that same type of roadmap for our business. So we develop out a very customized personal business development guideline. And that starts with branding yourself differently, because you've got to stand out from the herd. You can't be the same as all these other loan officers. And how we do that is we work on really becoming vulnerable and understanding more about our authentic self. And that authentic self, the value that you are as an individual, that becomes the forefront of your brand. And that's what you're putting out to people. And what we're doing with that, Wade, is that becomes the gateway of you gauging whether somebody's going to be allowed into your world or not. And then once you do want them in your life, that's where we implement business growth strategies to help you deepen your relationships with these people. Now, before we get into that, you understand the value of making ourselves different from the herd, right?
Oh, yeah.
Okay. So once we've got that branding built out and established, then, Wade, we develop out 7 different segments that you're going to be fishing in for business. This goes through your sphere.
Spheres, got a couple of them.
This is a much different bucket of potential than an outlet for loans. We work our past and current clients with scripting, milestone notifications, asking for referrals. We build on real estate agents. Wade, in 2018, I had 253 real estate agents. I could count on all of them for one deal a year. And I hated my life. I was doing 6 days a week, doing 50 million a year. My phone would ring at dinner time, bedtime, bath time, at church, dinner on Sunday.
All the time.
And I just said to myself, don't these people have any respect? But you know what the problem was, Wade? I didn't have any respect for myself.
Wow.
I let whoever the hell I wanted in the door that was willing to give me a deal. And I was known to people as an accessible, great loan officer with a lot of yeses in his toolbox. And what I realized, Wade, is I hated my life and I really didn't enjoy the money. Couldn't, man. And I was so inundated in my email and being micromanaged by other people that I completely neglected myself and I had no vision for my future. And I just put my foot down and fixed it. So I now have 14 real estate agents that I can count on for 40 deals a year, and that's all I need. Now, remember we talked about self-branding?
Right.
I'll relate that to myself. Wade, I have 4 older sisters, no brothers. I have 3 daughters, no boys. The last thing I need in my life is another female real estate agent. Okay.
Interesting.
I got a couple female real estate agents, but they're from a financial advisor background. And this is just a gig for them to keep themselves busy because they're wealthy. So they don't like to waste their time. They don't call me on Sunday for a pre-approval letter on a client they've been working with for 3 weeks. They don't get in the car with anybody unless they talk to me. And if that client's not willing to talk to me, they don't service them. They tell them to go somewhere else. So those people fit. Those women fit. So that's an example of how we make sure we keep ourselves energized and energetic in this industry, because energy is magnetizing, whether that be positive or negative. And I'm sure you've heard that before.
Yeah, magnet. They either repel or attract.
That's right. After real estate agents, we work on financial advisors. Okay. I'll give you a quick tidbit that'll be helpful for understanding how to bring value to a financial advisor. You've heard of HECM loans?
Yep.
Right? This could be one of the biggest winning recipes for your financial advisor success. You alone, Wade. Let's say you've got $1 million in retirement and it costs you $100,000 to live every year. Okay. That's 10% of your assets. So your advisor needs to be making near 10% for you to not be depleting that asset. If the stock market falls and your assets go to 50%, your expenses don't cut in half, do they?
No.
Okay. So now your 100,000 becomes a 20% gouge into your assets, right?
Yep.
With a HECM mortgage on the sideline, being fully knowledgeable as a financial advisor and knowing that they have access to get it quickly from Wade, or they put it in play and they just leave it alone until they need it. When we come through any form of a recession, whether it's now or in the next 7 years, if that home equity line or that reverse mortgage, that home equity conversion mortgage is put in place, when their assets decrease, they can borrow 50,000 from their assets and they can borrow 50,000 from a reverse mortgage. But the goal, Mr. Financial Advisor, is that I help you retain assets under management. so that your clients can retire with more comfort. Okay. Now here, I'll give you one more thing that I think you'll appreciate. I'm going to ask you a question. Your kid's buying a house today. Okay. And he has the option to put 5% down, 20% down, or pay cash for his house. Now, regardless of what he decides to do, when he goes to sell that house in 12 years, is the house worth any more money relative to what he put down?
No.
That's right. Okay. Is the equity in your house insured?
No.
That's right. Can we control the housing market?
Sure.
We can't control the value.
To a point, but no, for the direct question. No, we can't control the housing.
We cannot control the housing market. If your home value is decreasing at $100,000 month over month over month, you can't pick your house up and move it to a different country or a different market. But if our assets are in the stock market and the stock market's tanking, we can pull that out and put it into a fixed investment. We can shift that money and create a safer path. So I can financially, so Mr. Financial Advisor, myself, Wade, I can financially engineer a mortgage with 5% down in discount points to pay less interest over 30 years versus 20% down at a fair market rate. You want me to say that again, or did that stick?
No, it's stuck.
Okay. If you take, right now, the fair market rate's 8%. If you do 20% down on a $500,000 property, 8%, and you look at the total interest paid over time versus 5% down, maybe we buy that rate down to 6.99, paying 2 points. You will pay less interest over 30 years.
Agreed.
And you kept $75,000 gross dollars in your client's pocket to keep with his financial advisor.
Agreed.
Okay. My goal as a loan officer is to create capital control for my clients, because I've been in the industry in 2008. And all my friends and clients that put 20 and 30% down, man, they were stuck in those homes for a long time. But the clients that put 5% down, they started buying real estate real quick in 2010, 11, and 12. And some of those homes doubled in value. But the people that put too much money down, they couldn't do anything.
They're constricted.
That's right. They had to sell in order to buy because they put all their hard-earned money into something that's uninsured, into an asset, real estate, that nobody can control. Okay. There's too much greed that comes around real estate with way too many restrictions. Okay. So these are how we get in the door with a financial advisor. Okay. We work in a non-for-profit. You got to have meaning to what you're doing every day. I'll give you a quick story, Wade. I donate about $30,000 a year to the Care Fund. The Care Fund steps in and pays people's mortgage payments when their kids are in the hospital. In order for me to have my biggest impact on that fund, I gave it to a local philanthropy group of 50 men. Those men put an event together for me every year with 700 real estate agents, where we get together in a B minor baseball stadium and play a bunch of adult field games. And every team that comes in a team of 4, and they have to pay $500 to $1,000 to join. And they get all they can eat and all they can drink all day long and play a bunch of games. We turn that $30,000 check into a $250,000 check. I know 50 men that are serious about donating their time to a charity. And I meet north of 700 real estate agents. Now, half of them are commercial. The other half are residential. So If I walk out of there with 3 new real estate agent relationships and I deepen my roots with 50 philanthropists donating time and energy and money to charities, I'm already winning, right? And I'm having really big impact. And then what we do, Wade, is we teach subgroup events. So what we do here, Wade, is we take 2 people from your real estate community, 2 financial advisors, maybe a past client, maybe somebody from your sphere, and we teach you how to use event hacking to go find events for things to do with these people. But guess what we're going to do with these people? We're not going to the bars. We're not necessarily going to sports games if we don't have to. We're not overly entertaining. We're never throwing our own events because they're costly, stressful, time consuming, and we never know what the turnout's going to be. We get these groups together, Wade, and we go back to the 4 pillars of your life. Maybe you want to become smarter with finance. Maybe you want to get better at social media marketing. Maybe you want to get healthier. Maybe you're already a really healthy guy and you just want to get better at eating. And what we do is we get these people together because they're not all real estate agents. They're not all financial advisors. Go and do something that is personally developing ourselves so that no matter the outcome of that event, you walk away a smarter person. You walk away better developed. And you will set the tone and the expectations with these people that your time is valuable and that you use your time to advance your personal and professional life. We also do some lead generation in corporate accounts. Corporate accounts are where you chase HR directors and you try to find a company with 1,000 employees and you come up with some type of discounted mortgage program for everybody that works at that company. Maybe you give them a credit back for their appraisal or something along those lines.
We've got that. That was one of the things that attracted me to Nationwide. Good point.
So where do we find them? How do we find them? So once we've got that structure built out, then we teach you where to find them, how to find them. We teach you the 8-point touch system for continually staying in contact with people a different way every 8 weeks so that you're not doing the same thing every other week or every week. We teach time blocking, accountability, theme days. We integrate KPIs. These are key performance indicators so that you know exactly how much it takes in each of these segments to get a funded deal. And we dissect the amount of units that we want you to get out of each segment. Because when you think about doing 100 deals a year, it sounds like a lot. But when I break it down and tell you you need 24 from real estate agents, 12 from financial advisors, etc., it makes it much more obtainable.
Yeah, you know, if I can pause you, this is great. I'm absorbing a lot of this. So diversifying the types of referral sources, using strategies that are both beneficial to you and beneficial to them. I get that. The groups, the HR groups where you can provide a discount to all the employees, I get that. One thing that you said that made me stop you was 100 deals. 110 in 1 year was my max. I did that at the bank.
Yep.
And what you mentioned is they came from just about anywhere and everywhere. They didn't just come from one source. It wasn't one realtor out there saying this bank is great. No, it was financial advisors. It was the insurance people. It was the realtors. It was just a plethora. It was the pastor at the local church. It was the president of the local chamber of commerce. These people were sending people as referral sources that generated my best year of my life. Okay, the best year, 110 deals. It was, I hung my hat on it. They promoted me to a vice president at the bank. Black guy, big bank.
Yeah.
That made news in my community. They were like, wow, you got to be a vice president? Yeah, well, you don't know how much work it took, but I got there because 110 units got their attention.
Yeah.
Okay.
And
And
I, go ahead, please.
no, so
So it's hitting home.
yes, I
Yeah.
feel like I'm
We
with
we
you.
actually give you one business goal in my course, and that's 108 units to be exact.
You want me to go back there? I'm not that young anymore.
Yeah, you are. You're smarter this time. You know where to not waste your time. And I tell you, man, the thing that scares me the most is internal growth opportunity, because just like moving into that vice president position, the thumb presses down on you a lot differently.
Yeah, it does.
I don't like management positions. I
Well,
don't. I like helping people's lives. I like changing people's lives, but I like to be in control.
that's why I'm not in management. Now, I've been offered positions in management. They weren't remote positions. Okay. They were come in the office, you know, dress code.
Yeah.
Make sure everybody else is in the dress code mode.
Walk the
Okay.
walk, man. Drink the
Yeah.
Kool-Aid.
Drink the Kool-Aid. Exactly.
But
So
you made all that money happen and all those units close because you weren't drinking the Kool-Aid. You were making Kool-Aid.
exactly. And I was putting in it what I wanted to put in it.
And the
I
company
did that.
maybe didn't like the way your Kool-Aid tastes, did they?
No. They actually, the company didn't, but the people drinking it did. They kept drinking it.
Hell yeah.
And I think that's the key. If you are in control and you're making something that they like, that's benefiting them, they'll keep coming back for more. So what I took from your last 10, 12 minutes was these things that we do get down to the Zig Ziglar strategy of if you help enough people get what they want, you get what you want.
That's right. So we teach you how to reverse engineer your business so that you are impacting their lives and making them money. But we use automation. Okay. So when you add your financial advisor to the CRM in January, and then you add a new financial advisor to your CRM in November, well, the one you added in November missed 10 months worth of rich content. Maybe there were 6 or 4 emails in there that could have changed that financial advisor's life. Okay. So what we do is we turn our business into vertical funnels. And when we meet a financial advisor, we make sure that we correlate to the same messaging, retaining assets under management. And we make sure that that person that you're talking to, Wade, actually respects you for Wade and not your pool of products that he can get anywhere he wants.
Can't get Wade
Because
anywhere he wants.
you can't get Wade anywhere you want. And Wade's been there, and Wade knows when people are dicking around with his time. And we want to find people that really love what you do and love who you are as a person, because that's what monetizes and that's what feeds you. And I see that, and you know that. And there's people that get on these calls, man, they don't have it, and they don't get invited into the course. So we drop these people down once you have a relationship with them into a vertical funnel, and every person you meet, real estate agent, financial advisor, they all go down a different funnel. And it teaches them, once you have a relationship and you ask them, I'd love to add you to my CRM. I want to teach you how I can make you more money. We teach them how you can help them advance their business. And that's something that you already love doing. And instead of wasting an hour or 40 minutes or 5 days telling them vocally how you can make them more money, you push them down in automation so that you spend your time, because we can't buy more time, Wade.
Right.
You spend your time connecting and finding more connectors. So we try to work on establishing this business a specific way after day, week after week, year after year. And you have structure in your business model. And what happens is you get better at that job, and it compresses down into smaller time frames within that day. And as you're working on all 7 segments, you will always be busy working with one form of that 7 segment. And that will be the lead indicator as to what's keeping you the busiest. So I'll give you a quick story. Okay. Leading up to 2020 COVID, I had this diverse practice. And I was getting primarily deals from real estate agents. And I was helping past clients rebuy second, third time around, cash out, a little bit of cash out. And then all of a sudden, COVID comes around and rates bottom out. And because of my experience in the industry, Wade, I knew the banks were going to run out of money. So if anybody asked me about refinancing, all I did was lock the loan and send them 3 different options. No points, 1 point, 2 points, no points, a half a point, 1 point. Send them the spreadsheet and say, let me know if you want an option. And if you don't in 24 hours, I need to release your mortgage funds to the next person in line. Wow. That was it. Because if they didn't want it, I don't care. I've got lines out the door looking for money. And I knew the banks. Let me know when you want me to start talking again.
Sorry.
I knew the banks were going to run out of money. So almost overnight, rates went from 3 3/4 up to 5 3/4. We woke up the next day and the banks were out of money.
Yeah, they doubled. Rates doubled.
But nobody was expecting the Fed to step in and start buying mortgage-backed securities, but they did. So here I am working on these 7 different segments, always since 2018, religiously, every day, nonstop, theme days, Mondays, current clients, Tuesdays, real estate agents, Wednesdays, financial advisors, etc. All day long, same system, same process, fine-tuning my touch points, fine-tuning my meetings, fine-tuning my relationships. Well, everyone's sitting around refinancing, and all of a sudden I see a drastic intake in my conversations with real estate agents, my key performance indicators, in that amount of conversation shortening to the amount of fundings. It was almost 1-to-1 ratio. If I talked to a client, it was a guaranteed funding. And normally that's like a 4-to-1 ratio. So now what I would do is get my ass in, work on my 7 different segments every day, hurry up and lock my refis and give my client the option to either take it or disappear. Then I would go out and chase real estate agents from 2020 all the way to 2021. In 2021, Wade, when rates started going up, my conversations with real estate agents went from an 8-to-1 ratio, 8 conversations to 1 closing, and I knew they were dead.
Yeah.
And guess what? Everybody ran out of refis, and where'd they go? They all went chasing real estate agents when I was already done working with them. But because I was working with financial advisors, I was having a 1-to-1 ratio, 1 conversation to a guaranteed closing. Because a lot of wealthy people use what's called security-backed loans. Have you heard of them?
I've heard of them.
You can take a loan against your asset to get cash, and they would turn around and come to the market and pay cash for real estate. So remember when everyone's like, oh, where the hell's all this cash coming from? People were taking loans against their assets.
Right.
Because you don't need tax returns. You don't need pay stubs. You don't need any documentation. Nobody cares about your credit score. Nobody even cares if you have a job or not.
Right. They were doing dollar for dollar, and they were doing 50% on stock.
That's right. So they would take that money and run and buy the market. Then they'd pay for their house in cash or pay off their house because the stock market was going up during COVID. And they'd quit their jobs because they hated their boss and they were working at home. They're wealthy.
Yeah.
They'd start their own businesses, right? So I have all of a sudden people who need bank statement loans, asset depletion loans, all these creative non-QM products. Because when the stock market started correcting itself in 21, the margin on that asset to loan ratio has to remain stable. That would be like you putting down 20%, your home value going down 10%, and the bank calling you up and being like, hey, pay your loan down right now or we're going to foreclose. That's what happens with asset-backed securities.
Yeah.
So I'm talking $1 million loan, $2 million loan, $500,000 loan, real big loan amounts.
Big stuff. Yeah.
And the problem that I found is it's really hard to find a bank that's going to let you have a wire for more than $500,000.
Because of the fraud.
Yeah. I mean, it's really hard for an institution to not just pay off an existing bank and then maybe give you 100,000. These people needed like a real $2 million. So I'm talking like, now I'm working with Goldman Sachs and like all these high-end investors to find access to capital to bring back to these advisors. That kind of cleans itself up. And Wade, in the last 18 months, I've done more second homes than I've done in my entire career, because people that want to retire, they're not competing against Gen X and Gen Z. Gen X and Gen Z are gone. Nobody's buying real estate. These elderlies have a little more time to figure out where they want to retire. They're not in a hurry. And they don't care about an 8% interest rate because they bought in the 80s, right? And they've seen 18%.
Oh, yeah.
And they know, well, this market's going to change itself at some point.
They were paying 18% and they were getting 14% on their money. So they saw all that.
Right.
Yeah, I was there. I was there.
They've been here.
Yeah.
So we make sure that we've got depth in our business so that when the market decides to make a turn, we see the indicators telling us where those turns are. And we're already in the space that's going to get us busy. So we're never looking for business. We're never chasing monetary wins. We're developing relationships. And we're growing with people. And we're helping those people grow. And we're spread out into the different segments.